stack massive gains on massive gains on massive gains and create incredible results. That's what we're going to be talking about today. Not super high level strategies on any one asset class, but on the macro level, which asset classes do we want to be in and which asset classes do we want to shift to at the right time. And that's why now is the most incredible time, because we have a time when major asset classes are out of phase. There's going to be some big movements in several different asset classes over the next couple of years. For a whole bunch of reasons which I've been explaining for years, but we're going to breeze over that today because I think you guys have got a fair idea that we're in the middle of a massive recession. This is just the beginning. Those recessions always kind of last about 2 years, and we're in the very beginning stages of that. You know big things are coming. So now, how do we go in if one asset class is in a boom phase while others in a crash phase, we want to be swimming with the current in this asset class. Then when it flips and this one goes up and this one maybe comes down, we want to get out of that asset class, jump into this asset class and swim with the current. And if you add those two together, we're going to end up with our results way up here. So that is the goal for us today. So there is a lot to cover today, so I'm going to go super fast. I'm going to talk fast, I'm going to go fast, but I think it's going to be really fun for you. We're going to cover some really, really good stuff. Before I get into it, let's just do some housekeeping. There's no income claims being made today. I'm not a financial accountant, I'm not a financial planner, an accountant, a lawyer, any of those things. I'm just a guy, I'm doing it for myself, and I'm going to share with you what I do for me. Number two, I really think this is going to completely change your life, so I highly recommend turning off your phone, close the door to the room you're on, close your other tabs, close Skype, go ahead and just give me your attention for this next little bit. And at the end of it, so you know, my goal for you is to understand exactly when each asset class is going to go boom and bust, and for you to help you create your plan to how to manage the next couple of years. Okay, we're going to do all the major asset classes: stock market, real estate, precious metals, cryptocurrency, fiat currencies. We're going to do it all so that you just can jump in one asset class to the other and ride those multiple waves up, okay? And last little thing, just below this video, you'll see a box. It's a place where you can write in your questions. Just off camera here, I have Dan. He's controlling the feed so you see the right things today as we go through the presentation. And he's also collecting all of the questions that you guys are writing. So please, throughout this presentation, if you have a question, go ahead and write that in there. In fact, go ahead and start right now. Do me a favor. Have you been on this presentation before, or is this the very first time? If it's your first time, welcome. I'm confident we're absolutely going to blow you away today. If you've been here before, you're going to love it, because now there's so many of the predictions I've made. They're in the rear vision mirror. We don't have to talk about them anymore. We just get to go to the actual blueprint of how you catapult your wealth forward over the next few years. And I think you guys are going to love it too. So let me know, is it your first time watching this presentation, or have you seen it before? We love to hear from you. Okay, let's go ahead and get into this right now. So to begin with, let's start at the super high level, like 50,000 feet, right? There is a build up, there is a crash, and then there is the next boom. And you guys know, just in case there's any doubt, it's happened in every crash in history. Go back and look at a chart from the Great Depression or anyone, 2008, look at them all. There is always this big crash. Then there is this bounce up. It seems like, oh, is that the end of it? And then there is this the big movement is still to come. We are here, which is why I say this is probably the last annual Great Wealth Transfer webinar, because this time next year, I believe the horse is bolted, the window is shut, and there is nothing left to act. We are way down here, and there's nothing left for me to teach you. You've missed your chance. Right now, if you haven't got involved in following the strategy that I've been teaching for a little bit, you may be down 5, 10, 15%. Maybe you lost a little bit. I don't know. Maybe you're up a little bit. It doesn't really matter. You're still doing fine compared to what's about to happen. So you still have that opportunity. So I'm just going to keep this super simple. I'm not going to draw the little bumps along the way. There's just the build up, there's the crash, and there's the up. Here's some things we want you to learn. The build ups, they normally last 4 to 7 years. We just had a very extended one, nearly going 12 years. The crashes normally go 1 to 3 years. We're just going to call this like a 2-year period, okay? The crash is a 2-year period. Here's something that I want you to get your mind around that kind of is the the precursor to all of this. And it's another big, bold statement leading to proving my other big, bold statement at their head. Just so you know, in case you're not familiar with it, if you're new, I like to make ridiculously bold statements that seem impossible to be true, and then methodically proving them here on the whiteboard so that you understand. So the big, bold claim that we're working towards is that with just $5,000, you can go ahead and create $100,000 per year of residual income and give yourself complete financial freedom. On the way to that, here's another claim that I'm going to prove for you right here in a minute. The cost of financial freedom at this point is 10 times less than the cost of financial freedom at this point. And that's something people, it's just like, can't possibly, I get that there's a dip and maybe you can take advantage of it. 10 times, yes, 10 times cheaper for financial freedom down here than up here. So what we're going to do as a strategy today is we're going to work backwards. We're going to start with the end in mind, and we're going to come back and find out what do we need to have at this section, and if we know that, what do we need to have up here to make sure that everything happens so that we achieve our goal of complete financial freedom. So let's go ahead and talk about that for a second, complete financial freedom. This is an interesting one. Whenever I ask people, what is financial freedom to you? Or how do you know when you can retire? When will you know when you get there? I always get an answer that shows me these people are in big trouble. I get an answer something like, oh, $2 million in savings, or $4 million in my 401k, or some amount of money in my retirement vehicles. The moment I hear that, I know they're in big, big trouble. And the best way for me to explain this to you is with an anecdote of speaking to actually my former father-in-law. When I spoke to him, he's 62 years old at the time. He was a very, very successful lawyer. I knew he had several $1 million in his retirement accounts and things like that. And I asked him, I was like, John, when are you going to retire? And he was like, I probably could, but I just don't feel comfortable. Like, what if I live to be 100? What if my last 10 years of my life have really high medical expenses? I'm just terrified that no matter how much money I got, it's never enough. I mean, I'm 62, I might live to be 100. I can't predict my costs for the next 40 years. How will I just don't feel comfortable retiring. I can't, but I've probably got enough. But he said, Max, I got to tell you, I'm absolutely tormented. Just not too long ago, one of the guys I graduated law school with, he's been a lifelong friend, I went to his funeral a little while ago. He's the same age as me, he's 62, and just 4 months earlier, he got a cancer diagnosis, and then just 4 months later, he's gone. And so I'm at that age where just my friends are starting to die. I feel pretty healthy, I think I'm good, I think I'm gonna be around for a long time, but I feel like an idiot. This poor guy, he just worked until the day he died. He never ever got that retirement. And so on the one hand, I feel like I absolutely have to retire, or I'm insane, or I might miss my retirement and golden years and all the travel I've got planned. At the same time, I'm terrified to take that step, because what if I run out of money at the other end? What if I live another 20, 30 years and I feel trapped? And there's another concept that kicks in telling me that his plan effectively is to live off his savings and just not run out of money before he dies. That's the plan, right? And as maybe younger guys can't relate to this, but as you get older, every single person goes through this. They start to think about their legacy. What can they leave to their children? What charity can they leave to? What foundation can they set up? What can they do? And his strategy is literally to just leave nothing, just burn through it all and live a good life and have nothing left. And I know that doesn't make him happy. Let me give you, and as I said with him, let me show you a much, much better way to understand that concept of retirement and financial freedom. It's how I was able to become completely financially free at the age of 30. So, financial freedom is a number, but it's not that number. Financial freedom is an income. It's a residual income, money that just comes in every single month, whether you work or not. If you want to go on holidays for 5 years and come back, every single month that money comes in. And it can be a different amounts of money at different stages of life. My very first goal when I was in my early 20s was to hit $50,000 a year. If I had $50,000 a year coming in from investments, it doesn't matter what the investment is. Is it an apartment building that you own and that money comes in? Is it some high dividend paying stock? It doesn't matter. However that money comes in, as long as it comes in without me working, I know I'm going to be taken care of. And as a young guy, single, if I could pay the rent, go to the beach every day, buy a couple of cases of beer a week, I was a happy clam. That was financial freedom for me. Well, I hit that goal and then I went ahead and got married and have children, and now it's a very, very different figure. The next goal I tried to hit was $300,000 per year. That's what that means. So it depends on where you are in your life, but the question I have for you right now is, what is financial freedom for you? What's that number where if that amount of money is coming in from some investment that you can rely on it, it's going to be indexed to inflation for the rest of your life, and if that money was coming in, you knew you would never have to take a job that you didn't like. You would be completely financially free. Go ahead and write that down. We are going to call that the financial freedom number. It's your financial freedom number. I'm going to use a round number of $100,000 per year here. $100,000 per year is I'm going to use in the examples on the board here, and that's just going to make my math really, really easy. But for you, write down whatever that number is. So this figure of financial freedom, that is what we are working towards, I hope. Financial freedom is all that ever mattered to me. When I was young, when I was 18, I was just, all I cared about was financial freedom. And I made the commitment, I'm either going to be very rich financially free, or I'm going to go and live on a hut and be financially free. But live in a hut on the beach and be very, very poor, but financially free. I knew I was not going to be working forever. I knew I was always going to have that lifestyle. It's a commitment I made myself very, very early. And that has helped me so much, because as my income goes up and up and up, I just find it fun. I work for fun, just make more income. It's just a thing. More investments, whatever. So financial freedom is what I would encourage you guys to focus on. It's been a very, very good lesson for me. Once you do that, there is a metric that I don't know anybody else who talks about it. I invented the metric to my knowledge. No one else talks about this, but there's a very, very powerful metric. You need to know what your cash flow on cash. Cash flow on cash. What is that metric? Well, for any given time, depending on your skill set, depending on the time, when you make an investment, how much annual returns do you get back for the amount of money you put in? What that's helping us understand is, what is the cost to buy financial freedom? There's an apartment building here and it's making $1 million a year, and that's my financial freedom number. If I could own that, I'd have $1 million a year. What is the cost of that building? That is the cost of financial freedom. You need to know how much money do you need to have to buy that building, to put $2 million per year in your pocket, and you'll now know what the cost of financial freedom is. And here's the formula that is given to you. Don't worry, I'm just going to do some very light math here. It's all good. So this formula is the annual returns divided by the amount of cash that you put into the deal. The annual returns every year, the money that gets put in your pocket, divided by the amount of cash you had to put into it. That is your cash flow on cash returns. And it's the most important metric that I look at in any deal. How much income am I buying for every single dollar I put into that deal? I would encourage you to make this the focus of all of your investments. Next, there's one more little equation we want to write down. Once we know this, oh, and by the way, this cash flow and cash return, it changes with time. It's two main ingredients to it. One is your skill set. The higher your skill set gets, the better investor you become, the higher returns you get. But also, the different phases and cycles of the economy have very different expectations about how much cash flow you can get out of it. And that is what we are going to arbitrage and take advantage of here. You'll see that in just a minute. Once you have these two ingredients, you can now find out the most important thing is, what is the cost to buy your financial freedom? How much money on the chart? How much money do you need when you arrive at the bottom of that market and that inflection point? How much money do you need at this point to go ahead and buy your financial freedom? That is what we are going to go ahead and work out right here. Now, the cost of financial freedom is simply your financial freedom income, whatever you said it was, divided by your cash flow on cash abilities at any given time. Whatever rate of return you can get, that is what you need, that to know what the cost of financial freedom is. The higher your cash flow and cash returns, the better, you don't need as much money to buy your financial freedom, to buy your income. Does that make sense? Okay, so now we're going to talk about, just put that aside for a second. We're going to talk about, and I used to do this with all kinds of charts and graphs and looking at 2008 and looking at Great Depression, looking at all these different things in history to demonstrate exactly how the cash flow and cash returns over time change, so that we're there to take advantage of that. And I found a way more fun way to do this. I was very lucky. A couple of years ago, I was at a wedding in Cabo, And I happened to chat to and become friends with a really big time developer in Las Vegas. And he was sharing with me his experiences of going through the 2008 financial crisis. And he gave me a specific anecdote about a specific building of his, which was emblematic. It happened at the top end of town, happened in single family residences, happened in little eightplexes, happened all across the country, happened in different cities to a greater degree than others. But it really, really perfectly illustrates the point I need to demonstrate to you now. And this is if everything, I want you to pay attention to this. This is the big aha moment for sure that people get out of this presentation. They have no idea just how drastic the change is. So let's go through this presentation. My friend, we're going to call him, we're going to call him Guy 1, and the year is 2004. Okay? And he is going to build, I think it's a 250 unit apartment building in Vegas, something he's done several times before and several times after. But he has got a $25 million building, okay? And so he needs to put in a $4 million deposit, and he also goes and gets $21 million from the bank. He goes ahead and builds the building, fills it up with tenants, puts a management team in place, and goes off and moves on to his next project. But during this time, he's making $2 million per year net operating income. $2 million per year. If you're not familiar with this, what NOI means, net operating income, it's all of your profits, all of your rent, all of your income, less all of your expenses except the financing expenses. So if you have to pay a management team, marketing team, maintenance team to maintain the building, you can deduct all of those expenses. You deduct every single one of your expenses except your financing costs, okay? So his building, filled up with tenants, is bringing up $2 million in probably 2006 by now. Probably took a couple of years to build. It's bringing in $2 million. And the interest cost, the mortgage repayment on his $21 million loan is $1.5 million. So his profit per year is $500,000 per year. 2008 comes along and the bank calls him up and says, hey, how you going? He's like, I'm good. Are you happy? I've been making all my payments. You should be good. He's like, no, we're not happy. We believe, and they were right, the market has crashed. We believe that your building is no longer worth 25 million. We believe your building is now worth 14 million. And you've got a problem because you owe us $21 million and we think you've only got $14 million in security in there. You're upside down. You need to chip in $10 million in a few months or else we're foreclosing on you. And even though you haven't missed a payment, even though you're paying things off beautifully, we believe you're upside down and you need to stick in $10 million to fix this or else we're foreclosing on you. Why did they do this? If they foreclosed on him and got this bad thing off the books during the right time and the right parameters, the government will bail out the banks and cover their losses. If they leave this on the books and miss their window to get a bailout, they might have to eat the losses themselves. So even though this entrepreneur is paying the banks and taking care of everything, they don't like it. Stick in the money or get out. Okay. He had about 10 of these buildings, right? He managed to save about half of them. He put in the money and saved them. Another half he couldn't afford. He just let them go, let the banks take it. This is the story of one of the properties that he let go and the bank took it. Guy 2 shows up in 2009. He comes along and he buys this same building for $7 million. $7 million. It cost $25 million to build. He buys it for $7 million. Now, I know all of these numbers are true and accurate because I know Guy 1. I don't know Guy 2, so I have to make some assumptions about how he financed it and whatever else, so I'm going to go ahead and do that. Let's say he put down a 20% deposit. So he puts down 1.4 million. I'm going to draw a line down here to separate these two. He puts down 1.4 million, and he has to borrow from the bank $5.6 million. Oh, to keep that consistent, let's keep that line out of there. Okay. Now, in case you don't know, in the world of real estate, over time, rents are very, very consistent. There's no boom bust cycle in a sense. They're very, very consistent. They just gradually go up with inflation. The price of property goes up in boom and bust cycles. Rents are very, very consistent. So even though in 2008 and the world's crying in their Cheerios and everyone's miserable and unemployment goes up and whatever else, people are getting kicked out of their homes, they've got to rent somewhere and the rents don't go down too much. So The net operating income when he handed over this property was still $2 million. It might have lost a little bit, but it wasn't. But also, the Fed had dropped interest rates significantly, so the cost of his interest went down. We're going to ignore those two things. They're moot, so don't worry about them. So we're going to say his net operating income is still pretty close to $2 million during this time, after he takes over the building. Okay. Now this guy was paying $1.5 million in interest on his $21 million loan. He would have got better interest rates, but we said we'd ignore that. Forget that. Just factoring in for the size of the debt, this guy, how much does he have to pay his interest costs on his mortgage? $400,000, right? 1.5 million on 21 million, $400,000 on 5.6 million. What does that mean? Every year, this guy is putting $1.6 million into his pockets. Now, again, this is happening on like a 250 unit development, but it happened in single family residences. It happened in 5-plexes and 8-plexes and 20-plexes. It happened all over the joint during this critical time of 2008 when everyone was crying in their Cheerios at the very bottom. These things come about. All right, let's go ahead and do some math and apply our formulas and see if we're this guy and we're trying to buy financial freedom in 2004, what does it cost comparing to buying financial freedom in 2009? Let's go ahead and check those numbers out. First thing we've got to do is we've got to work out what is this guy's ability, what's his cash flow on cash returns on his investment, okay? So we'll start up here. His cash flow on cash returns are equal to the formula. His annual returns, he gets to put $500,000 in his pocket, divided by the amount of cash he put into the deal. He put $4 million into the deal. That equals an eighth. It's pretty close to about 12%. His ability to invest in 2004, cash flow on cash, is 12%. Okay, for a given level of financial freedom, I'm going to use round numbers of $100,000. To purchase $100,000 per year of residual income from this building, it's given by this formula. What does his financial freedom cost in 2004? Well, it's given by the annual income you want. That's $100,000 per year, divided by his ability to invest cash flow on cash. It's 12%. $100,000 divided by 12%, it's equal to pretty close to $800,000. The cost of financial freedom in 2004 for this guy is $800,000. He goes and buys a building with his skill set for $800,000. He can buy his income, his financial freedom of $100,000 per year. Okay, let's keep that in mind. And I'll go ahead and box this cash flow and cash as well. Let's go ahead and do the exact same work for guy number 2, Johnny on the spot, in 2009. His cash flow and cash return is equal to the annual returns. He's making $1.6 million in his pocket every year, divided by the amount of cash he put into the deal, a $1.4 million deposit. You do the math on that, it's a little bit better than 110%. His cash flow on cash return is 110% compared to only 12% for this guy. All right, let's finish this off. The cost of financial freedom in 2009, if your definition of financial freedom is $100,000 per year, is $100,000 divided by your cash on cash flow ability is 110%. You do the math on that, and it's around $90,000. In 2009, if you show up with $90,000, you can buy $100,000 a year income. In 2004, to buy that same income, it cost you $800,000, nearly 10 times the amount. But look at the skill set of these two guys. This guy is a real estate developer doing 250 apartments at a time. He is one of the most talented people in the entire economy. He has to go and buy a parcel of land, maybe possibly amalgamate several pieces and create this amazing parcel of land. Then he's got to go and get an architect. He's got to create a vision, create certain types of, should it do a hotel, an apartment building, a retirement village? An incredible amount of research and effort goes into deciding what the hell to build there. Then once it's designed, he's got to take it to the city, get the plans approved, go through all the 3-letter bureaucracies, get the environmental thing done, bribe God knows how many people you've got to do to get that through in Las Vegas. Then he's got to go and deal with construction companies, deal with trade unions, deal with strikes, deal with materials, get this whole thing built. Once it's built, he's got to use his marketing expertise to fill it up with tenants. He's got to put a management team in place. He's got to put a maintenance team in place. He's got to do this whole thing, tie it up with a bow, whoosh, leave it aside so he can go and start his next building. And for all of that work, he's going to get 12% cash flow on cash returns. What is Guy 2's skill set? What did he do? He showed up, the building was built, the management place was in team, the management team was in place, the maintenance team is in place. Everything is done and dusted. It's already got a bow on it. He shows up and he gets 110% cash flow on cash return. Anybody can be guy number 2. You just need one skill set. Your one skill set is to have the patience to sit and wait and not be going crazy during the boom times, but wait for that big crash, come in at that inflection point, and all of a sudden, the cost of financial freedom for you is nearly 10 times less than in 2004. But 2004 wasn't the worst of it. What if you tried to do this building in 2007? In 2007, you're halfway through building it. You just got the concrete shell up. You remember driving along the highway 2009, 2010. There's this concrete building. It's got no windows. It sat there for 5 years. What happened? Someone was building it. The bank came along and said, oh, hey, you got to stick an extra $10 million into this deal. And the developer just went too hard, walked away. They made 0% return if you start this building in 2006, 2007. In 2004, you got a 12% cash flow on cash return. In 2009, with no skill set, you can just show up, get 100% cash flow on cash return, and absolutely crush it. The one skill set you need, learn to swim with the current. Understand the macro, understand when to jump into the right asset class, and play that perfectly. There's so many cool examples of this through history, by the way. Probably the very best, most famous example of this in all of history is Paris Hilton's grandfather, the founder of the Hilton Hotel empire. He bought 4 hotels in the peak of the Great Depression, between 29 and 32. He bought 4 hotels, and every single one of those hotels that he bought, all of them, were making 100% cash flow returns. Not cash flow on cash returns, just cash flow returns. Meaning, if he bought a building or a business, a hotel that was bringing in $2 million in net operating income minus all the expenses, then he bought it for $2 million. Imagine buying an asset for $2 million, paying it off in a year, let's call it 13 months with interest, paying it off in a year, and now you own a building outright with no debt on it, and you just stick $2 million a year in your pocket ever after. Hilton did that 4 times between 29 and 32, and he created the foundation of what became the Hilton Hotel empire. There's just so many stories through history, and it's not just in real estate. It happens in the stock market too. These companies, what's most important is that during a crash, wealth is neither created nor destroyed. The wealth is the stuff. It's the farmhouse, it's the equipment, it's the building, it's the business, it's the hotel, it's the wineries, it's all that stuff has wealth. The price gets smashed and you can come in and buy it for pennies, but it's still there, you still own it. On the stock market, what do companies do when the price is getting smashed? Very often, especially these massive companies, Google, Apple, they're sitting around with hundreds of millions of dollars in the bank. They're not going anywhere. They're still going to be there. They're still going to be great companies. It's their price that gets smashed. You can come in and buy them for pennies. And very often, what do these companies do to support their share price? They start issuing rather large dividends. Not all of them, but you just need to find one who's giving out very large dividends. And all of a sudden, you can purchase financial freedom at incredible rates. Probably the most famous example in history of this one, John F. Kennedy, his father, just 45 days before Black Tuesday, he goes ahead and liquidates all of his stock, sells everything. And in the next 4 years, he's buying down here at the bottom, and he buys up everything that he sold just before it crashed, plus 45 times more. He multiplied his wealth by 45 times just by jumping out of that thing. When the current was about to turn against him, he jumped out. The current turns against him, he jumps in and then just gets rocketed forward, swimming with the current. I know I got a very educated crowd here. They're probably going to say, yes, but he had insider trading. Yes, you're probably right. But the principle of what I'm trying to share is still valid. Okay, the cost of financial freedom down here is at least 10 times cheaper than up here. And if we can just get that discipline to do this and go down here, whoo, you can multiply your wealth so much. It is absolutely insane. Guys, I hope you guys are excited by this, because I predict, about 18 months away from this. I'm predicting pretty close to December 2021. This is what we're going to be doing. Between now and then, there's going to be just a big steady decline in stock market, real estate. We'll tie this all up with a conclusion in a minute, but I hope you understand, this is, as an opportunity for you to create wealth, there's just never been anything like this monumental crash that's about to happen. Two things are happening at the same time. This monumental bubble that has been created over this 12-year boom cycle and unprecedented Fed printing and central bank printing around the world. And then you throw in COVID-19 and go into a worldwide lockdown and businesses just collapse. The bigger the crash, the bigger the opportunity. Another little story on that, because I've studied crashes from all over the world. I remember hearing an interview once. It was about a guy. He was an adult at the time, but he was telling a story. He was a young boy during the 1990 Argentinian peso collapse, and his family got completely wiped out. They had a local business. They got completely wiped out. Their business was gone. Their savings were destroyed. The currency went into hyperinflation. Except they had one customer who for the last several months had been paying them in US dollars instead of pesos. And after this crash happened, the family had one little shoebox. Their business gone, their savings destroyed. They had one little shoebox with $3,000 US dollars into it. And at the bottom of that crash, they put that $3,000 into the Argentinian stock market. And that family has been living off the dividends of that investment for the next 30 years. That was his story. The bigger the crash, the more incredible the opportunities. So, I don't know. I think it's going to be a pretty big one, guys. I think it's going to be a very, very big one, and our opportunity is incredible. So, let's tie this off. Remember, here's the graph. We want to arrive at this inflection point. You tell me, do you believe that you can be guy number 2 and show up and buy some single-family residences, or maybe like an 8-plex, or maybe a 15-plex or something? Are you able to get 100% cash flow on cash returns if they're just sitting there waiting to be picked up? All you need to do is arrive at this point with the right psychology. A few resources behind you. We're going to find out exactly how many. A few resources in your pocket, and you can buy financial freedom at an absolute bargain. So do you believe that you can be this person who can grab 100% cash flow and cash returns? I think literally anybody can. So let's work backwards. How much money do you need to arrive at this point to create your financial freedom? Let's go ahead and do that now. Okay. The cost of financial freedom is your financial freedom number, whatever your number is. I'm going to use $100,000. $100,000 per year of income divided by your ability to cash flow and cash invest during that time, which I think we just said, if you're guy number 2, you can get 100% cash flow on cash. They're everywhere. They're in single family homes. They're in apartment buildings. They're everywhere. $100,000 or any number divided by 100% is that same number. If your retirement number was $100,000, you need $100,000 at that point to buy $100,000 per year of income. If your number was $300,000 per year of income to be completely financially free, you need $300,000 at that point to buy $300,000 worth a year of income. So now you know, whatever your freedom number is, that's how much money you need to arrive. Let's call it Christmas 2021. That's how much money you need to get there. However, we've still got 18 months, 2 years to go. Now, I know, again, only because you guys are a very, very educated crowd, I'm going to skip over a whole bunch of stuff here. I've got free videos on this on YouTube. When you signed up, I probably sent you this video as well. So you guys all know this, but Bitcoin and cryptocurrencies has a 4-year cycle. Okay, in 2013, yeah, where are we? 2013. Bitcoin hit $1,200 after a massive, for the previous 12 months, it went from $10, actually I think more accurately it was 12. It was $12 to $1,200 in the year 2013, a 100x return. Comes back down here to like 250, and then in the next cycle, so now 2013 plus 4 years, we're at 2017, it goes from $250 up to a peak of $20,000. Over the next couple of years, we come back down here to like $3,000, and now we're on our way up. We're already just going to call it $10,000 for round figures. In this next crash, by the end of 2021, on the 4-year cycle, you guys know about the halving. I'm not going to explain all this. Up here, I'm expecting Bitcoin to be anywhere between $100,000 and $500,000 per Bitcoin. And let me explain where I did this. I have lots of very, very famous prediction videos on YouTube because I predict Bitcoin price not next week, but like 2, 3, 4 years out. I've been doing it with incredible accuracy, have very much a reputation on YouTube for doing this. And I made a video, it was in April of 2019. And my first prediction was that in May of 2020, that the Bitcoin price would be $15,000, $15,500 to be specific. And the price in May was something like $5,000 of the year before. Price in May was about $5,000. And I said, look, this is not the big exciting year. The big exciting year is the one after. We're going to be pretty sideways. We're going to end up about $15,000. I think we ended up in May of 2020, we were about $10,000, okay? But my prediction for May of 2021 was that we would be at $100,000 Bitcoin. And probably the end of 2021, I thought we'd probably get to $200,000 Bitcoin. The end of 2021, just before an absolute massive crash in Bitcoin. But by the end of 2021, we are about to go through this every 4 years, this parabolic move up. But just recently on YouTube, I made a public prediction. I said, listen, I have changed my mind. I don't think we're going to hit $200,000 anymore. I think we're going to hit $500,000 Bitcoin. On the condition, it was a condition. So right now, I believe that we are going to go, there will be some banking failures over the next, in like first world countries. So some, probably most likely in Europe, could be Germany or Spain or Italy or something like that. If anywhere in the first world, in like a G20 country, goes through a significant banking crisis and there's like just depositors lose money, anything like that, you will see the price of Bitcoin and precious metals absolutely explode. And I now think it is more likely than not that that will happen. And so therefore, I think it's more likely than not that Bitcoin will get to $500,000 in this next cycle, okay? Without the banking failures in a first world country, I bring that back to $200,000. But now my prediction is up to Bitcoin to hit $500,000 because of banking failures. Okay, let's take a look at that. For round numbers, today, the Bitcoin price, I'm gonna call it $10,000. Forget the $500,000, forget that, let's say there is no banking failure. And we're just gonna say the Bitcoin price goes to $200,000 is my prediction. That is a 20x. So now, you know you need to arrive here at your financial freedom number. How much money do you have to stick in Bitcoin now in order to arrive at that point with your financial freedom number? Well, you just divide it by 20. If your goal was to buy $100,000 per year of income, right, $100,000 divided by 20, the expected gain of Bitcoin, $100,000 divided by 20 equals $5,000. Remember the big, bold, ridiculous claim that couldn't possibly be true I gave at the beginning of the presentation? With just $5,000 invested today, hold it in Bitcoin for 18 months, something like that, I believe you're going to turn that into $200,000. From that $200,000, you can, $5,000 will turn it into $100,000. With that $100,000, you will be able to, at that point, get cash flow on cash returns of 100% or more, and you will be able to buy $100,000 per year of income. I hope that is exciting for you guys. Like, for the vast majority of people, just think about it. In my opinion, virtually, if your financial freedom number was $100,000 per year, you can probably get your hands on $5,000 a day. Like, if your financial freedom was $300,000, you can probably get your hands on $15,000 today, right? Because it's like psychology is linked to your abilities and current skill set. If your financial freedom was $50,000, you can probably get your hands on $2,500 today, right? That's why I believe virtually anybody can go ahead and literally be retired. They can be financially free in the next 18 months, 2 years. Woo, guys, this is very, very exciting. I've been predicting this for a long time, and it is all kind of coming to head. There's so many things I predicted. They're in the rear vision mirror now. They've come true, and here we are. So let's go ahead, put a big bow on this, wrap it up with all the conclusions, and tie this on. So again, I do just want to stress, because these markets are out of phase, it's very rare that it happens. That's why this opportunity is so good. The Bitcoin phase is about to go parabolic at the same time that real estate and stock market is about to get crushed. So if we're in this river now, and then about 2 years later, these currents are going to reverse. Bitcoin will go through its another cataclysmic crushing 2 years and probably go down about 80%. And real estate and stock market and things will probably come back. And we get to ride this wave up. Jump out of this asset class into this asset class and ride this wave up and stack our booms and just create incredible results when everybody else is just getting smashed and thrown around in the murky, muddy, torrent-filled waters. You know where to be, because it's going to be an incredibly tumultuous time. And if you believe as I believe, then these are the asset classes you need to go to. So let's go ahead, wrap this all up, and come up with a specific plan. What asset classes are going to be good for us? What asset classes are going to be great? Okay, number one, I believe, you may have predicted this already, Bitcoin. Bitcoin and cryptocurrencies is the place to be for the next 12, 18 months. It's just going to be a phenomenal period, and I'm just so unbelievably excited by it. There might be one more big crushing pullback on all the markets, by the way. I think there may be one more, but nonetheless, doesn't change my prediction for like the end of 2021. I still have those high expectations. How we get there, a little bit loose. Maybe there's another really good buying opportunity coming in, or maybe we just go ahead and get Bitcoin right now. Another phenomenal asset class to be in, precious metals. Last year when I made this prediction, people were like rolling their eyes, like, really? It's like, okay, precious metals hasn't done a darn thing. Right now we see gold just took out an all-time high. Silver is still way off its all-time high. The gold-silver ratio is still, well in silver's favor. Pardon me. Well in silver's favor, so I would suggest silver over gold right now. But all precious metals are going to be a great, great place to be. And then this one's going to shock the hell out of you, I'm sure of it. It's okay. Fiat, specifically US dollars. What? What do you mean? Money printing galore, dollars are going to crash. How can fiat currencies possibly survive? I 100% agree with you, but timing. I think we do have a little bit of time, and cash is an okay place to be for a short amount of time. We can be in these ones for a little bit longer, but this one we can be in a short amount of time. I'll be more specific in a minute. Where do we not want to be? We do not want to be in the stock market. Do not be in the stock market. This last little session and this little dead cat pounce we're having, that is just so all the smart money can get out. You'll notice there's a lot of retail investors coming in. We took Robinhood and a whole bunch of things. I'm not going to go into the details of that, but this is the smart money's running, the dumb money's rushing in, and of course the government money, that all goes out to their friends, and so the smart money's getting out. They've made their profits. Let's put those assets on the books of retail uneducated investors and the taxpayers, and let's get ourselves on the sidelines. The crash comes in, then they all come back in and buy it for pennies off the dollar once the retail investors and the taxpayers got slaughtered. That's the plan. They always do it. It's happening again. It's a bit of a yawn. Real estate has not had the significant damage yet, but it is gonna happen hard. Big time setbacks in real estate and the stock market. You do not want to be in those two asset classes, in my opinion. And that's why fiat is looking good compared to those. But I wouldn't hold fiat for very long. If you're going to hold fiat, I suggest US dollars. If you're, it is the cleanest dirty shirt, for lack of a good analogy. It's the cleanest dirty shirt of the fiats. Be there, but don't be in there for very long. But if you want to miss out on the big cataclysmic crash here, and this cataclysmic crash here, that's why my prediction is one more big pullback. It's a liquidity event. It's a crisis event. You might see these two things get crushed for a period of like 2 or 3 months, and it will be a phenomenal buying opportunity, and then off to the races. I can't guarantee that's going to happen because of all the money printing going on, a few other bits and pieces. So my assets are in all of these things. And by the way, this is something that is incredible to say. I said at the beginning of the presentation, I am a cash flow guy. I love cash flow. Everything for me is about working towards buying cash flow. What are the 3 asset classes I'm in? No cash flow, no cash flow, no cash flow. What am I saying to get out of? Cash flow, cash flow. That hurts my heart to say that, believe me. But it is a necessary evil. It's very, very smart. Why? We are in the middle of a gigantic, multi-decade, debt-fueled bubble. So the Fed's printing money. When there's just printing money, and it's available here, go borrow, go borrow, go borrow, the things that can be bid up in price a stupid amount is when you borrow money, you buy cash flow, and then you can afford to pay your interest repayments, so you can borrow more, and then you buy more cash flow, and you can make your interest repayments, and so you borrow more, and it's a vicious loop. When the currency supply expands as it has, it's the things that produce cash flow that form the biggest bubbles. That's why I can't be in them right now, and I've got to be on the sideline. When those bubbles pop, that's when I come in. The price of these gets smashed. Now I get to buy that cash flow for pennies on the dollar in order to just sit on the sidelines. The number one goal for everything, arrive at this point with a good psychology and as many resources as possible. Everyone else is going to be crying in their Cheerios down here. The only thing you need to succeed really is a good psychology. You don't even need much money to get this. I do these examples here of 100% cash on cash flow return. I'm expecting 1,000% cash on cash flow return and even infinity. Why? Because no money down deals grow on trees then. Let me explain that real quick. Let's just say, okay, guy bought a house for $120,000 like 3 years ago. It went up to like 150. He's got like $100,000 of debt. And all of a sudden this crash comes and his $150,000 house goes down to $100,000. So he's got a $100,000 house. He's got $100,000 of debt on it. There's no equity in his deal. It's a house he lived in. He can't afford it. What's the point? He lost his job. What's the point of staying here in this? I've got no equity in it. I just want to walk away, but I'm going to go bankrupt. I just, screw this. I'm going to give it to the bank. I'll just deal with the bankruptcy later. It's like, hey, buddy, don't go anywhere. There's no need for you to go bankrupt. Let me take over this property. I'll assume the loan is what it's called. I will take over this property. I'll deal with all the headaches and I will pay off this $100,000 loan. Your credit rating won't get hit. You don't have to go into bankruptcy. You just give me this property, no money down. I'll take over for it and I'll turn it into a winning cash flow situation. And the no money down deals are just going to be huge. You don't need money at that inflection point to make a lot, is the actual truth. But it's way better to arrive there with a shit ton of cash than not, I would suggest. So why not go ahead and do that, ride the Bitcoin wave, etc. All you need to be here is a good psychology, good skill set, and you are sorted. Okay, let's go through how this is all going to play down. As this crash hits, what's the first thing they have already done? This used to be a prediction. I've got to change my language. What's the first thing they'll do? I've got to change it. What's the first thing they did? They will lower interest rates. In preparation for this presentation, I watched my old one. And it's like, so I've got some of the old language in my head. It's like, the first thing they're going to do is they're going to lower interest rates. But typically, they lower interest rates by about 3%. This is the Fed, at the cash rate at the Fed. They lower by about 3% during a recession to go ahead and boost the next economy. But the problem was the cash rate was just 2.25, I think. They lowered them all the way to 0. Maybe they can go negative, but it hasn't really worked for Europe. So this was never going to be enough. So what were they going to do next? Bailouts. Bailouts is what they're going to do next. Well, we know that's happened. It's called stimulus packages all over the world, every single country on the planet. They've just been printing money. The taxpayers are taking the losses and they're just giving money to organizations, institutions, banks. They're doing whatever they've got to do to bail out the big institutions and the banks. But I said it was not going to be enough. So this prediction has come true. this prediction has come true. And finally, I said there's one more prediction. This won't be enough, this won't be enough this time around, and they're going to do something else, the bail-in. Very important you understand this. If you have not followed, it's a method they tested in 2013, a little Mediterranean country called Cyprus. One day in Cyprus, Saturday morning, for some reason, it happens on the weekend, Saturday morning, the banks announced via the national broadcaster, the two biggest banks in the country are broke. They're insolvent. They're upside down. It's dead. For the next 3 weeks, ATMs are dead. Banks are all closed. No access to your cash whatsoever. Zero. At the end of that 3 weeks and 3 weeks of negotiating with the European Central Bank, they come up with a plan. They're going to do a bail-in. So what they did was, I agree with, if you had $1 million in the bank, it got chopped in half. You got $500,000 in the bank. Whatever you had in the bank, it just got chopped in half. You lost it. It's gone. Your money got chopped in half. After the 3 weeks, the banks reopen. Everyone's balance has been chopped in half. If you just had your balance chopped in half, what would you want to do? You want to get the half out that you had, at least keep that. Of course, they know that. You can only access your money at the rate of 100 euros per day. So you lost half it instantaneously, and the other half you can't actually access. You are stuck. That is what a bail-in is look like. They liked that model. If you've been reading like the G20 summaries and whatever else, they've talked about it. They have already put on the books all the laws they need to do in US, in Europe, to go ahead and do a bail-in. I think a bail-in is almost certain this time. I believe it's most likely to happen first in Europe. And like I said, if that happens, if there's a major G20 country, think Germany, think France, think Spain, think Italy, think England, think the US, think Canada, think Australia, in any major first world country, if there's a major bail-in at a bank and just people's bank accounts get chopped in half, you are going to see the price of precious metals and Bitcoin absolutely go ridiculous. So, and I think it is now more likely than not than that will happen. So this is what we've got to look forward to.